If you are watching this video right now, on this exact day, at this exact moment, I need you to understand something before I say another word. What I am about to show you in the next 60 minutes is not a theory. It is not speculation. It is not some internet rumor I picked up from a Reddit thread at 2 a.m. What I am about to walk you through, number by number, data point by data point, is the single most important structural shift in the global silver market that has occurred in the last 15 years. And I am not exaggerating when I say that. In fact, I think I am understating it. Because what China just did to the global silver supply chain is bigger than what they did with rare earths in 2010. It is bigger than what OPEC did with oil in 1973. And it is going to have consequences that will ripple through the global financial system for the next decade. And the mainstream financial media is barely covering it. They are talking about Fed meeting minutes. They are talking about CPI expectations. They are talking about whether the S&P is going to pull back 3% or rally 5%. Meanwhile, the most important commodity story of the decade is unfolding right in front of their faces, and they are either too blind to see it or they have been told not to talk about it. But I am going to talk about it, because that is what this channel is for. My name is Mimster AG Asian Guy, and I do not work for a bank. I do not work for a hedge fund. I do not get paid by any mining company or bullion dealer to say what I say. I read the data, I connect the dots, and I tell you what I see. And what I see right now is something that should have every single investor on the planet paying attention. So let me start with the headline that almost nobody is talking about. China has formally designated silver as a strategic resource. Now, let me explain what that means, because those words sound bureaucratic and boring, but the implications are anything but boring. When China designates something as a strategic resource, it means the government has decided that this material is critical to national security, critical to economic development, and critical to military infrastructure. And when they make that designation, they restrict who can export it. They did this with rare earth elements in 2010, and it caused an absolute panic in Western manufacturing because suddenly the materials needed for smartphones, electric vehicles, wind turbines, and military equipment were being controlled by a single country. And the prices of those materials went vertical. Some rare earths went up 10x in a matter of months. Well, they just did the same thing with silver. And here is the specific number I need you to burn into your brain. As of right now, only 44 companies on the entire planet qualify for Chinese silver export licenses. Let me say that again, 44 companies. Out of every company in China, out of every mining operation, every refinery, every trading house, only 44 have been approved to export silver outside of Chinese borders. And China is one of the largest silver producing and refining nations on Earth. In 2024 alone, China imported over 7,000 metric tons of silver. That is approximately 225 million ounces. That is over 25% of total global mine production flowing into one single country. And now they are locking the door behind them. But before I go any further, I need to ask you something. Where are you watching this from right now? Drop your country and your city in the comments because I want to know how far this information is reaching. Are you in the United States? Are you in India? Are you in the UK, Canada, Australia, Pakistan, Germany, the Philippines? Tell me where you are because I need to understand who is paying attention to this and who is still asleep. And while you are down there in the comments, smash that like button because I can see the analytics on this video in real time and I already know what is happening. The algorithm is not pushing this content the way it should be. And the only way to fight that is for you to engage with this video right now, not at the end, right now. Hit like, drop your location, and let us keep going because what I'm about to show you next is going to change how you think about silver forever. Now let me give you the context that the mainstream media is deliberately leaving out of their coverage. Silver is not gold. I know that sounds obvious, but most people, even most investors, do not understand the fundamental difference. Gold is primarily a monetary metal. Only about 10% of annual gold production goes into industrial applications. The rest goes into jewelry, central bank reserves, and investment products. But silver is a completely different animal. Approximately 60% of all silver produced every single year is consumed by industrial applications. Not stored, not vaulted, not held as a reserve, consumed, destroyed, used up in manufacturing processes where it can never be economically recovered. And this is the part that should terrify anyone who is short this market. Let me walk you through the industrial demand numbers because when you see them all laid out together, you will understand why the price is not going down. It is going up. And it is going up for structural reasons that cannot be reversed by a Fed meeting or a dollar rally or a margin requirement increase. Solar panel manufacturing alone now requires over 100 million ounces of silver every single year, and that number is growing. The global solar build-out is accelerating, not decelerating. Every major economy on Earth has committed to renewable energy targets that require massive expansion of solar capacity. And every single solar panel that gets installed on every rooftop and every solar farm on every continent requires silver. There is no substitute. There is no alternative material that provides the same electrical conductivity and reflectivity properties at the same cost. They have tried. They have experimented with copper paste and aluminum alternatives, and none of them deliver the efficiency required for commercial solar panels. Silver is irreplaceable. Then you add electric vehicles. Every electric vehicle contains more silver than a traditional internal combustion engine vehicle. The electrical contacts, the battery connections, the control systems, the charging infrastructure, all of it requires silver. And global EV production is scaling exponentially. Then you add 5G infrastructure. Every 5G base station, every antenna, every circuit board in the global telecommunications build-out requires silver. Then you add medical devices. Silver's antimicrobial properties make it essential for wound dressings, surgical instruments, and implantable devices. Then you add electronics miniaturization, where smaller components require higher purity silver for reliable connections. And now, and this is the part that almost nobody is talking about yet, you add quantum computing. Emerging quantum computing applications are demanding silver at purity specifications that have never been required before. We are talking about 99.9999% pure silver for quantum circuit fabrication. And the volumes required for quantum computing are going to scale dramatically over the next 5 to 10 years. So when you add all of this up, you get a structural demand picture that is unlike anything we have ever seen in the history of this metal. 60% of annual production consumed by industry. Growing demand from solar, EV, 5G, medical electronics, and quantum computing. And now China has locked down its export pipeline to just 44 companies. Do you see the problem? The supply is being restricted at exactly the moment when demand is exploding. And that is not a temporary imbalance. That is a structural deficit that is going to persist for years. Now let me talk about what happened in the price action over the last 2 weeks, because this is where it gets really interesting. And this is where the manipulation becomes visible if you know what to look for. 2 Fridays ago, silver experienced a single-day crash of approximately 33%. Let me say that number again, 33% in one day. The price went from around $90 to the low 60s in a matter of hours. And if you were watching the mainstream coverage, they told you it was a normal correction. They told you it was profit-taking. They told you the rally had gotten overextended and the market was simply finding equilibrium. That is a lie. A 33% single-day move in a major global commodity is not normal. It is not profit-taking. It is not equilibrium. That is a coordinated attack on the price using algorithmic selling, margin requirement increases, and paper market manipulation designed to shake out weak hands and allow the big institutions to reload their positions at lower prices. And the proof is in what happened next. Within days, the price started climbing right back. Silver broke back above the 50-day exponential moving average. It reclaimed the $80 level. And as of right now, it is trading near $80 to $90 and consolidating. And here's what the technical analysts are telling you that is actually correct for once. Consolidation, after that kind of crash, is the most bullish signal you can see. When a market gets hit with a 33% drawdown and then recovers 70 to 80% of that move within days, it is telling you that the underlying demand is real. It is telling you that every dip is being bought. It is telling you that the structural forces driving this market higher are stronger than the manipulation trying to push it lower. And let me show you what is happening in the physical market right now, because the paper price on your screen is not the real price. I want everyone watching this to do something for me this week. I want you to call your local bullion dealer, or walk in, or check their website, and I want you to look at the premiums they are charging over the spot price for physical silver. Because what you are going to find is that the premium, the amount you pay above the quoted spot price to actually take delivery of real metal, has exploded. We are seeing premiums of 10 to 15%, and in some cases even higher depending on the product. Silver Eagles are sold out at multiple dealers. Maple Leafs are on back order. Generic rounds have 4 to 6 week delivery times, and this is happening while the spot price is supposedly just sitting at $80 to $85. The real price The price you actually have to pay to hold physical silver in your hands is already $90 to $100 and climbing. And I want you to report back to me in the comments. Tell me what your dealer is charging. Tell me what the premiums look like in your area. Because I am building a real-time map of physical market conditions from the ground level. And I guarantee you the picture is going to be very different from what the COMEX ticker is showing. Now let me connect this to the mining economics, because this is where the story gets even more compelling. At current silver prices near $80 to $90 per ounce, the economics of silver mining have been completely transformed. Let me give you some specific numbers from the major producers. Leading silver mining operations achieved year-over-year production increases exceeding 52% in 2025. That is not a typo. 52% growth in a single year. And they hit record 20-year production highs. These companies are generating cash flow at levels that make their feasibility studies look like jokes, because most of those feasibility studies were written using conservative silver price assumptions of $35.50 per ounce. And now silver is trading at more than double that assumption. So let me walk you through what happens to the economics when you plug current prices into these models. One major development stage project published a feasibility study with an after-tax net present value of $1.8 billion using $35.50 silver. At current pricing near $90, that NPV jumps to over $4.5 billion. The internal rate of return goes from 111% to over 200%. The payback period drops from 7 months to 3 to 4 months. And the annual cash flow goes from $500 million to over $1.2 billion. These are not speculative numbers. These are the mathematical outputs of plugging current market prices into published engineering models, and the grades being discovered at some of these projects are absolutely extraordinary. We are seeing drill intercepts of 800 to 900 grams per ton silver equivalent. That is double the global average mining grade, which sits below 400 grams per ton. What that means in practical terms is that these operations need to move half as much rock to produce the same amount of silver compared to the industry average. Their costs are lower, their margins are higher, and their environmental footprint is smaller. And the sector has raised over $600 million in financing throughout 2025 alone. Institutional ownership at leading companies now exceeds 60%. This is not retail speculation driving the mining sector. This is institutional capital flowing into hard assets because the smart money understands what is coming. And what is coming is a supply crisis that cannot be solved quickly. Here is something most people do not understand about silver mining. You cannot just turn on a silver mine like flipping a light switch. From discovery to production, the timeline for a new mining operation is typically 7 to 15 years. You need exploration, resource definition, environmental assessment, permitting, feasibility studies, financing, construction, and commissioning. And even when you fast track all of that, you are still looking at 5 to 7 years minimum. So the supply response to current prices is not going to arrive tomorrow. It is not going to arrive next year. The new production capacity that is being planned and financed right now is not going to hit the market until 2028, 2029, 2030 at the earliest. And in the meantime, the structural deficit is going to get worse every single year as industrial demand continues to grow. Now, I need you to tell me something in the comments right now. How long have you been following the silver market? Are you new to this? Did you just start paying attention in the last few months? Or have you been watching this for years, waiting for the moment when the fundamentals finally took over and the manipulation finally broke? Because I want to know who my audience is. I want to know if you are here because someone shared this video with you, or if you have been on this journey for a long time. Drop it in the comments. Tell me your story. Because this community is what makes this channel different from every other financial channel on YouTube. Let me talk about the geopolitical dimension of this, because what China is doing with silver is not happening in isolation. It is part of a much larger strategic realignment that is reshaping the global financial system. The BRICS nations, Brazil, Russia, India, China, South Africa, plus the new members including Saudi Arabia, UAE, Iran, Egypt, and Ethiopia, are systematically moving away from dollar-denominated reserves and into hard physical assets. Russia has been accumulating gold for over a decade. India has been buying both gold and silver at record levels. Look at what is happening in the Indian market right now. Gold is trading at 156,000 to 158,000 rupees per 10 grams in major cities. Silver is fluctuating between 260,000 and 300,000 rupees per kilogram depending on the city and market session. In Delhi, silver is at over 3,000 rupees per 10 grams. These are historically unprecedented levels, and Indian demand is not slowing down. It is accelerating. Despite short-term corrections, the domestic market in India remains near all-time highs because Indian buyers understand something that Western investors are only beginning to figure out. They understand that precious metals are not just investments. They are insurance against currency debasement, against government mismanagement, against the kind of systemic financial instability that has been building in the Western banking system for the last 15 years. And that brings me to the Basel III NSFR enforcement, which is creating additional pressure on the banks that have been running the paper silver market. Under the net stable funding ratio requirements, unallocated precious metals positions now require 85% Tier 1 capital reserves. And the banks that have been maintaining massive short positions in paper silver and paper gold through the COMEX and the London bullion market are staring at a balance sheet crisis. The total paper claims on silver globally, including COMEX futures, London unallocated accounts, synthetic ETFs, and over-the-counter derivatives, is estimated at over 30 billion ounces. The total physical silver that exists above ground on the entire planet is approximately 2 billion ounces. That is a 15-to-1 leverage ratio, 15 paper claims for every single ounce of real metal, and the regulators are now forcing the banks to reconcile that imbalance. They are forcing the paper market to confront physical reality. And when paper meets physical, physical always wins. It just takes time, and that time is now. Now let me address the people who are watching this and thinking that I am being too aggressive with my outlook. Let me address the skeptics directly because I respect skepticism. Skepticism is healthy. You should question everything, including what I am telling you. So let me give you the bear case. Let me give you the reasons why silver might not go to $100 or $150 or $200 in the near term. Number one, the Federal Reserve could pivot hawkish and strengthen the dollar significantly. A strong dollar historically puts pressure on commodity prices, including silver. Number two, industrial demand could slow if the global economy enters a recession. If manufacturing activity declines, the 60% of silver that goes to industry could decrease. Number three, commodity exchanges could raise margin requirements aggressively to cool speculation, as they have done in previous silver rallies, including 2011. Number four, technology improvements could reduce per unit silver requirements in some applications over time. And number five, recycling technology is improving and could eventually offset some primary mine demand. Those are legitimate risks. I acknowledge them. But here is why I believe the structural bull case overwhelms every single one of those risks. On the Fed and the dollar, silver rallied to $90 while the dollar was also rallying. That tells you the demand drivers for silver are independent of dollar dynamics. On recession risk, the renewable energy build-out is being driven by government mandates and subsidies that do not disappear during recessions. Solar installations continued growing even during COVID. On margin requirements, the Basel III rules are constraining the bank's ability to manipulate the paper market in ways that were available to them in 2011. The regulatory environment is fundamentally different now. On technology substitution, every attempt to replace silver in solar panels and electronics has failed to match its performance characteristics. And on recycling, even with improved technology, primary mine production remains essential for meeting growing consumption requirements. So, yes, there will be pullbacks. Yes, there will be corrections. That 33% crash 2 weeks ago was brutal, but the structural foundation of this market is stronger than anything I have seen in my years of covering precious metals. And let me tell you about the $70 floor that the technical analysts are watching because this is important for anyone trying to manage risk. After the recovery from the 33% crash, $70 has established itself as a strong support level. Every dip towards $70 has been met with aggressive buying. The 50-day exponential moving average has been reclaimed, and the consolidation pattern we are seeing right now between $80 and $90 is textbook bullish consolidation. The market is building a base for the next leg higher, and when that breakout comes, when silver clears $90 with conviction and volume, the next target is not $95 or $100. The next target, based on the supply deficit, the Chinese export restrictions, the Basel III constraints, and the industrial demand trajectory, is $120 to $150 within the next 6 to 12 months. And I want to be clear that I am not pulling that number out of thin air. I am basing it on the mathematical relationship between available supply, structural demand, and the regulatory constraints that are preventing the banks from creating infinite synthetic supply to suppress the price. Now let me bring this full circle and tell you what I think you should be doing right now. And I need to be very clear that I am not a financial advisor. I am not telling you to buy or sell anything. I am presenting data and analysis, and you need to make your own decisions based on your own financial situation and risk tolerance. But what I will tell you is this: the window to acquire physical silver at anything close to current prices is closing. The premiums are rising. The dealers are running low on inventory. The supply pipeline from the mines is constrained. China has locked down its exports, and the regulatory environment is forcing the paper market to reconcile with physical reality. If you own physical silver already, do not let a 10 or 15% correction shake you out of your position. This is not about short-term trading. This is about positioning yourself on the right side of the largest structural shift in the precious metals market in 50 years. And if you do not own any physical silver yet, I am not going to tell you to panic buy. But I'm going to tell you to educate yourself. Look at the data I have presented in this video. Look at the Chinese export restriction numbers. Look at the industrial demand growth. Look at the mining economics. Look at the leverage ratio in the paper markets, and then make your own informed decision. And I need you to do one more thing for me before this video ends. I need you to share this video with one person, just one. Send it to a friend, send it to a family member, send it to someone who you think needs to hear this information. Because the mainstream media is not going to cover this story until it is too late. They are not going to tell people about the Chinese silver export restrictions until the price is already at $150. They are not going to explain the Basel III implications until the banks are already declaring force majeure. And by then, the opportunity window is closed. So be the person who shares this information early. Be the person who warned your friend before the move happened. That is how we build this community. Not through algorithms, not through paid promotions, through people sharing real information with people they care about. My name is Mr. AG Asian Guy. I read the data, I connect the dots, and I tell you what I see. And what I see right now is the most compelling setup in the silver market that I have ever witnessed. The supply is constrained, the demand is structural, the manipulation is breaking down, and the price is going to reflect physical reality whether the banks like it or not. Stay tuned to this channel because I am going to be covering every development in this story as it unfolds. And make sure your notifications are turned on because when the next big move happens, I am going to be here breaking it down for you in real time. This is MSAR AG Asian Guy, and I will see you in the next one.